Investing can be very confusing when you first start out. In this video, I'm going to be going over the best ways that you can invest your first $1,000 and giving you all the options so you can pick the one that is best for you. Before we get into this video, I'm just going to tell you some things that you should not do with your first $1,000. Options, Forex, bonds, margin, and day trading. All of these are very risky for beginners, but if you try them, you might get a valuable lesson out of it. Let's get into the video. The first option that you have when investing your first $1,000 is putting it into the stock market. However, as we all know, the stock market seems like an ominous beast in the beginning, but trust me, it's actually not. You do not need to be a professional to invest in the stock market. In this section, I will break down stock market investing simply. The first way to invest in the stock market is by far my favorite, and that is index funds. Think of an index fund like a bubble that has a lot of stocks within that bubble. For example, the S&P 500 has the 500 top US companies, so companies like Amazon, Apple, Google. The reason why index funds are the best is because you can buy all those stocks and have exposure to all those stocks at an affordable price. If you were to go out and buy 500 stocks, including like Apple, Amazon, Tesla, it would cost a lot of money to own one of every single one of those stocks. But if you're investing in an index fund like the S&P 500, that's around $300, $400, and you get a portion of all of those stocks. When you own this many stocks, it allows you to become diversified, which basically means that if one stock were to fluctuate a lot, your overall portfolio would not fluctuate a lot because you have so many other stocks that counter that fluctuation. For example, if one of the 500 stocks in the S&P 500 were to go down, you probably would not even notice it. And that's because those 499 stocks either stayed the same or moved up. On average, the S&P 500 returns 13% per year. This means that if you put in $1,000 into the S&P 500, you'd likely be making $130 per year before inflation. This can definitely fluctuate through years, so some years you might make 30%, some years you might make negative 2%. The S&P 500 is not the only index fund. There are thousands of index funds out there that different companies have created, and each of these different indexes tracks something else in the market. So there's one that tracks the entire stock market, there's one that tracks only technology, there's one that tracks all the international stocks, so there's really a lot of options. I'd say that the best two are probably the total stock market index fund and the S&P 500. Those have gained about 10 to 13% year over year, very consistently for the last 30 years. The next option that you have for investing in the stock market is investing in individual stocks. This one is definitely centered more towards more advanced investors, but beginners can start to dabble as well. If you're a beginner, I would recommend choosing a bigger company like Apple or Tesla that you really believe in over the long run and just buying and holding that stock. Again, this is more risky if you're a beginner, but if you've done your research, then you can actually beat the S&P 500 and other index funds. When you start investing in individual stocks, it really helps to analyze the stock, and that way you can see if the stock is undervalued or overvalued, and that way you can determine if you really want to buy that stock. You should always be holding stocks for the long term, and that way you will avoid short-term capital gains tax, and you can also avoid emotional investing. For the majority of people, unless you really enjoy learning about the stock market, an index fund is usually the better option. The third option that kind of relates to the stock market is buying cryptocurrency. Cryptocurrency is often seen as a scam, and there are a lot of scams out there, but the big two cryptocurrencies, aka Ethereum and Bitcoin, are both actually pretty good investments as long as you can understand the risks. Before investing in these, you definitely want to understand how these cryptocurrencies actually work and what they are, and that way you won't freak out when they drop 50% because you believe in the technology. And if you do your research and end up not believing in the technology, don't buy cryptocurrency. Just remember that cryptocurrency is still a speculative asset, so as it gets more and more into the mainstream, it'll be less speculative, but for now it's still pretty speculative. Like I said, if you're looking into cryptocurrency, especially if you're a beginner, you should just stick with the big two, Ethereum and Bitcoin, because a lot of the altcoins are essentially just like gambling. They go up 30% one day, down 60% the next, up 30% the next. So if you are new to investing, do I recommend investing in cryptocurrency? Yes, as long as you're willing to do the research. When it comes to cryptocurrency, nothing is for sure, and your portfolio could drop 50% tomorrow. So you have to understand the risks and see if you're okay with taking the chance of losing, but also making a lot of money. One last note on the stock market is that if you are saving for retirement, you should take advantage of the tax-advantaged retirement accounts like a Roth IRA or a 401k that are out there. These accounts will save you a boatload of money on taxes, although with a 401k, only contribute up to your employer match. However, max out your Roth IRA every year. The next option that you have when investing your money is actually not investing it at all. you can decide to keep your money in like a high interest yield savings account. And that way, if you're planning on buying something in the near future, you don't even have to worry about market fluctuations or like putting the money in a business and having that business die. If you're saving up for something, consider a high yield savings account. A high yield savings account is a savings account that pays you some interest. Usually this interest will not be that much, and it'll be way lower than the 10% that you'll probably get in the stock market. But then again, if you're saving up for something and don't want to see your money fluctuate, then a saving account is a good option. For example, if you are saving up to buy a car and you have about $10,000 saved and you decide to put that money into the stock market, let's say there's a market crash, your portfolio goes down 30%. Now you only have $7,000 towards that car. Over the long run, you will make money, but in the short term, the market can fluctuate a lot. So if you're saving up for something, savings account is usually a good option. Savings accounts can be risky over the long run because the interest rate that you get on a savings account is usually below the inflation rate. So over time, you will actually lose money in a savings account even though you have that interest on it. So over the long run, you're better off investing in the stock market. The next area that you can invest your $1,000 in is real estate. Now with only $1,000, you probably will not be able to buy a house, but you still can get in on some real estate action. The best way to do this is with REITs. Now what is a REIT? REIT stands for Real Estate Investment Trust. REITs are a way for the average person to invest in real estate. When you own a REIT, you own a bit of a property and you will get paid like part of the rent or part of like the appreciation that comes from that property. When you are buying a REIT, you are essentially lending out your money to the person who owns and manages that property, and then they can use that money to better the property, and you get a percentage of whatever that property makes for lending your money out. For example, the manager or whoever owns that property, whenever they collect rent, you will get a slice of that rent, which is usually paid out in dividends. The popular real estate investing platform Fundrise said that the average return on a REIT was 9.47%. That's pretty good, but it's below the S&P 500's 13%. Personally, I still prefer index funds, but if you do not want to get into the stock market for whatever reason, then REITs are a good option for you. The last place that you can invest your $1,000 is in a business. Now this is probably where I would invest my first $1,000 because the ROI on a business is going to be much more than you're going to get in the stock market or real estate. But this one is not for everybody, because if you don't want to take on the work of starting a business, which is a lot of work, or you just have a day job and you just want your earnings to earn you more money without doing any work, then you're better off investing in the stock market. But if you do not have that much money and you want to make the most of it, then go ahead and start a business. Even if you have a day job, it can still be a great idea to start a side business, and eventually that side business could even take over your day job, and you could be doing what you love while not having to work a day job. When you are starting a business, you have to be okay with the idea that your business might fail. No matter how hard you work, it could just not be a good idea. This is a really hard barrier for most people to push through, but even if you do fail, you will have learned so many valuable lessons that you can keep incorporating into your future businesses. And the more businesses you start, the more likely it is that one of them will work. Starting a business with $1,000 is more than enough. You're definitely not gonna like hire a whole development team to create you like a top level app or website, but you can hire some freelancers on Fiverr to, design you a nice little website, nice Shopify store, whatever you want. For example, I could use that money to start a dropshipping store. I pay about $1,000 in ads and get $10,000 back in sales. That is a much higher ROI than you would get in like the stock market or real estate. This is a great option for people of any age who want to start a side hustle and then make some extra income or just another stream of income so they don't have to rely on their job the entire time. Thank you all so much for watching. I really hope this video brought you some value and taught you something new about investing. If you are interested in personal finance, making money, or investing your money, then I recommend you follow along with the channel by subscribing. If you have any questions at all, make sure to comment them down below and I will make sure to get back to you. Thank you all and have a great day.